super happy once again to have Andrew Rader back on the show once again. He is Rader Trader on TikTok. He is an all-around great guy. He's a friend of the show, and we're happy to have him back on to talk the markets. Andrew, great to see you once again.
Absolutely.
Well, welcome back. How has your day been so far?
Awesome trading day. Obviously getting into some action with the indices. I've been trading a lot of QQQ and tech recently with obviously it has been beaten down from this market correction. It still has a lot of upside and it's been very volatile and fun to play with, of course, the NASDAQ and the QQQs.
Yeah, a lot of attention, obviously, on some low float. I'm just keeping my eye on a few things here. ISPO, guys, trying to get back to 11 right now on a decent volume spike as well. So heads up if you're watching that ISPO. So much to discuss here. These low float, crazy stocks going nuts, really. You were talking more about the market overall. Give us your take on where we're at, generally speaking here after this monster moved back to the upside off the lows that we saw going back a couple of weeks ago. I mean, a bit of congestion, probably healthy.
Yeah, so a huge move from the upside for, I think it was 16 being the bottom on the SPY, and just then been rocketing. This is obviously kind of because of the anticipation, right? The expectation of the markets pricing in a bigger conflict with Ukraine and Russia. And when we didn't get that, when we didn't get the inflation or the super aggressive rate hikes that we were expecting, the markets can sigh a relief and forget about it. Like they do as always. And of course, we do have some more downside we expect. Obviously, this is just a big move and coming back into maybe the 430s, 440s levels would be nice. But of course, a big topic for today and a lot of investors is the yield curve. A lot of people are mentioning, hey, the yield curve, the 10-year minus 2-year, maybe coming to cross soon. And of course, that's a leading indicator as well, guys. You need to understand that that's not an area to panic. Oftentimes, it's a 2 years lagging indicator. And of course, I personally like to use the 10-year minus the 3-month. It actually lags the 10-year minus the 2-year yields. And when we get a cross back above the zero conversion line, we normally get that recession 6 to 18 months after that, based off my research. And so that's a great idea to give you a time frame to say, hey, I'm going to invest until then. Until then, we can go, breaks off and really, reevaluate the markets.
Yeah, so much attention on that 2 and 10, which, as we were talking about a little bit last week, on its way to inversion. It's interesting you mentioned, the 3 months, not something a lot of people would even think about, paying attention to. But if you look at a chart, it's difficult to come up with a chart, but if you look at a chart of that, it's actually steepening right now, going in the exact opposite direction, which kind of points in, the complete opposite direction. So great point there. Give me a couple of names you've been watching today. I mean, you were mentioning the overall markets here, but individual stocks on your radar today.
Yeah, absolutely. So I've been looking a lot at Apple. Sean, I think you were on Apple as well. It's been kind of getting up to towards the top of this channel on the long term. If you guys pull up the daily, so it'll be really interesting. There he is. It'll be really interesting to see kind of how Apple plays out. Especially some of these, semiconductors and stuff like that, chip makers. Apple did release some news that they are looking for, a new supplier of these memory chips and stuff like that. So you should see some excitement in that field.
What up, Andrew? Yeah, good call out there on Apple. And I got fed up because I was trading AMD, and of course that got downgraded. You might have just heard me go on a little rant there about that name. And I find that that's the important thing is stock picking, right? And I think that you can't just sit here and trade the same names day after day. I think it's important to learn about the names and understand, how they trade to take advantage of them. Otherwise, you're not going to put, big money into it. But at the same time, speak to the importance of maybe stock picking on specific days. And then what do you look for? We have our watch list on TraderTV.Live. We also have the sticky note on my, which I'm sure you look at TraderTV Sean there on Twitter. So, what do you look at to say, hey, these are the couple names that I'm going to focus on today. Is there anything specific in your daily sort of warm-up?
Yeah. So a lot of what I do a lot of options. That's my main focus these days. Starting with equity as well. When I did equity, I would find a lot of volume scanners, relative volume, the unusual volume, because obviously with more eyes on a stock, you could have a bigger move and a little bit more liquidity for those smaller names that typically don't get those sizes. But for options, me personally, I do a lot of research when it comes to, top flow. So a lot of what, if a name gets a lot of calls day after day put into it, then hey, maybe that sets up for a short trade, right? If you're over leveraged on one side, lots of calls piling in, you might be able to go short on that stock if you find a good supply zone area of rejection. As well as I do a lot of open interest trading. So trading ranges, especially with the indices, it's a great market to trade indices with, hey, we're going into this, 460 level, lots of buyers, lots of support on that level. Can we go lower? We can't. So we're going to bounce up to that top of that range. And that's been happening a lot. And that's kind of the focus of a lot of my trading.
I got a great question for you, but you were talking earlier on about sort of higher level, Andrew, and I'm glad you did that, talking about the yield curve. And we don't always get into that top end because we're talking about the equities moving. Now, when it comes to expressing trades, right, we usually do it in equities. I express even like nat gas, I'm looking at TEL today instead of the actual futures. But when you look to express trades, when you're looking at bond yields or when you're looking at something macro, do you favor the futures? Is it only options? Do you trade ETFs? What is your go-to in that situation? Do you even just look at something like a TLT? Like, what are you looking for? Because when something is important or you get big news, you want to know immediately, what is my vessel to trade when I'm expressing it?
Yeah, a lot of macro perspective in my trading when it comes to identifying which one, the long-term stock, what's the next sector, right? Everyone's wondering that. And a lot of times, guys, it's the ones that are beaten down the most. For example, with that correction, tech got slaughtered. And of course, when SPY was getting to those 416 levels, my eyes were actually on the QQQs. I was going, okay, how much does tech have in it? And it had a lot. So I actually got what they call leap contracts. For those who are unaware, just longer expiration options contracts. They perform, they're once again, very risky, guys. Options are leveraged kind of assets. So you have to be careful with that. But I did get them for May expiration, as typically in April with a midterm year cycle as well. You can get a lot of volatility during these times. And I just played it safe. I could have gone June, right? But June typically is pretty red with these midterm cycles. It's kind of dropping in April, end of May. So I just paid for May. And that's kind of that.
Look, we're just showing the Qs chart right there. You get that bottom. It's just a more aggressive move and more opportunity than there was in the SPY. That's why we're talking about it. But I also love what you just dropped. You didn't say the line, but you could have said sell in May and go away. But that's what it's all about. When you're doing that higher level, you have to think about those sort of cyclical trends, and that's just not for the markets. You can look at that sector by sector, like maybe fertilizers, after spring, and then they can tend to slow down. People used to joke about Canada Goose. You only ever buy it in front of the winter.
Yeah.
But I love your perspective, Andrew, and thank you so much for doing that with us.
And I will say that healthcare, if you guys are looking at anything for this upcoming cycle, if you look at these macro, economic market cycles, we are considered to be maybe towards the top, right? We have those interest rates looming. We have, all these things coming together for that bear market, but we still have more upside potential, guys. And we need to understand that healthcare, right? If you guys look into healthcare, we still haven't seen much from healthcare. And especially with the quarter end being soon, very soon, that you can expect that these institutions need to move their money somewhere. They're not just going to go stuff it in a shoebox under their bed. So they're going to have to put it into something. And I've been looking at a lot at healthcare, hasn't been moving as much. And we're still yet to see at the top. Healthcare does perform pretty well. So we'll look into that.
Oh, Andrew, because there's a stock I've been talking about, and I was buying. I actually bought some long-term in the 65s when Danaher reported, and it was good earnings, and they came back down to the low. Ooh, baby, they're right at that right in front of the 300 and the dollar price, and that 200 period moving average. So this is the one. Again, it's a stock. Actually, my wife bought it before I did. No word of a lie. Well, I kind of told her, but anyways, I like this one for potential break. But whether you're talking about UNH or some of these names, which maybe start to get going again, you're absolutely right. You got to get out in front of those sectors before they make that run. It's not always about reacting to it. If you can kind of figure out that next thing, then that's where you're going to be golden. And we've got a lot of, I'd say, gold from you here, Andrew. We can't wait to have you back. It's been another fantastic segment here.
Absolutely, Neil. Thank you so much.
And as we go back to some trading right here, guys, there's Apple. Bang with Apple as we go here. And we have Rader Trader on. Thank you so much for coming through.